Hello and welcome everyone to the 2024 Annual General Meeting of the Beneplan Employee Benefits Cooperative. My name is Alana Nish and I am the Executive Assistant to the CEO of Beneplan, Yafa Sakeja. As we wait for quorum so we can officially begin the AGM, I'm just going to run through a few housekeeping items. So number one, this meeting is being recorded for archival purposes. Number two, there is a copy of the 2023 annual report, which we recently published, and I've added it to the chat bar for your convenience. You can find the minutes of last minute's AGM listed in page 54 of the annual report. Your mics are set to mute. The only participants with the ability to speak are the host and the panelists who are running the meeting. If you'd like to ask a question, please use the chat bar or the question option. They are both found in the bottom of your Zoom settings. We will be holding 5 votes throughout the meeting. Voting will happen through a poll, which will pop up on your screen. Each item requires 2 motions before we can move to vote. And please submit a motion to vote by just typing motion or yes into the chat bar. After each vote, we will share the voting results right away. Please note that there is only 1 vote per member company allowed. So please ensure that you know who from your company is voting if there are multiple people present. And also note that advisors and external vendors are not permitted to vote unless your company is a member of the cooperative and they are the plan sponsor representative. Polls will be deemed passed if we reach 50% or more with a response of yes or approve. And once we reach quorum, which is a minimum of 30 member companies, we will ask for an official motion to begin the AGM. I'd now like to introduce Yafa Sakeja, the CEO of Beneplan Incorporated, and turn the time over to her.
Thank you, Elena. Welcome, everybody. Thank you so much for joining us today. I wanted to just remind everybody why we're here and why it's very important that you're all participating, engaged in this annual general meeting. When Beneplan was founded over 30 years ago, it was founded because Canadian entrepreneurs that were working with Beneplan wanted to exit the endless cycle, the endless drama triangle of insurance companies trying to make more profit every year and trying to be more opaque and clandestine about how those fees and profits are calculated. And 30 years today, I can say, well, there's 2 things that haven't changed. Insurance companies still want to make a profit every year. Insurance companies still want to make more profit in the following year than they made the prior year. And what also hasn't changed are our values as a business. So for some of you who are new, I just want to remind everybody that Beneplan Inc., who we represent, is different from the Beneplan Co-operative, which all of you plan sponsors or clients or Canadian businesses are member owners of. As a reminder, Beneplan Inc. does not own the cooperative. Our benefit plan is in the co-op, so we're definitely a member of the co-op. But the cooperative was established originally because over 30 years ago, it was actually one employer that said to our founder, "Don't you think we would have better rates if we came together as a group?" This was in the late 90s, and that employer was right. And so ever since then, we have always made a point of listening to the market, listening to what business owners, HR leaders, finance leaders in Canada are telling us. And if they're telling us, hey, let's come together and form a buying group for the purpose of driving down the cost, not just the premiums, but all of the assumptions that underwriters use to get to and calculate the premiums, eliminating risk for business owners, because we know that there's a lot of benefit companies out there that will reduce costs, but at the risk to the business. So increasing the self-insurance risk to the business. And then also maintaining our integrity as a business that has full transparency and accountability as it pertains to compensation of all the parties involved, and also full transparency and accountability of the values that we all practice. So as a reminder, Beneplan Inc.'s values, so the third-party administrators' values are, number 1, a drive for excellence. Number 2, to tell it like it is. So to always tell the truth, never mince words, always be very clear about what you're talking about. Number 3, to be strong. We know that we have a lot of threats against our business model in the market. To be honest, I don't think if I walked into a room of the CLHIA that my first name would not be a 4-letter word among insurance companies. So while they're happy to be working with us on the volume, I don't know if they're happy that we've been able to reinject $32 million of cash back to Canadian entrepreneurs since 2000, plus another $30 million of fees that have been saved. And so this combined $61 million of just pure cash reinjection into the Canadian economy is not something that insurance companies are very thrilled about. So again, telling it like it is. So therefore, every single year, we have to be strong as an entity. We have to always make sure that we're preserving this phenomenal Canadian cooperative, because we know there's a lot of actors out there that really don't want us to exist. We also make a really big point of being a Canadian cooperative. We know there's a lot of, some of you have heard the term captive. A captive is basically an insurance company that's owned by its customers or owned by the largest funder. So for example, of the Fortune 500 companies that you see, about half of them own their own captives, own their own insurance companies. But to be frank, a lot of them are offshore, and we don't want to participate in that offshore insurance intermediation game. We want to participate in Canada. We want to be domiciled here. We want to pay taxes in Canada because we care about Canadian enterprise and Canadian business. Our fourth value is to be innovative. So every year we have to be very creative to think, what have we not done, or what stone have we not overturned? And that's why it's so important that the board of directors, who are formed of customers, member owners, like all of you that have joined up, hold us accountable and ask us questions. And so in the annual report that you'll see a lot of minutes that are there. And it's critical that everybody has a chance to ask questions. Some of the innovative things that we brought to the market before other players brought to the market was, number one, making sure that drug rebates, also called PLAs in our market. PLA is the industry jargon for a drug rebate paid by the drug manufacturer to the insurer. We were the first in 2012 to say, actually, that money needs to go directly to the Canadian entrepreneur. And so we're one of the first to negotiate a refund agreement with Reformulary Group. And now we are also doing that with Green Shield on their PLAs as well. So that's an example of the innovation we've brought. Another example of the piece that we brought is we have begun actually in the last few years is hiring actuaries that used to work for insurance companies. These subject matter experts used to be inside the insurance company, setting rates, hiring underwriters, training underwriters, and now they're working for employer side members on behalf of the cooperative. So making sure that when we're negotiating your life and long-term disability rates, that again, we've turned all the stones possible. And then in terms of our last value, it's do the right thing. So are we compassionate? Are we kind? Are we thinking about who we serve, first of all? And this all buckets up to our original mission, which is to make Canadian healthcare affordable for as many Canadians as possible. And we hope that by driving down the cost of benefits without being subject to this bait and switch marketing method that we just refuse to practice in, we're one of the only businesses that absolutely refuse to participate in this bait and switch methodology with artificially low rates in the first year, just to increase them dramatically in year 2, 3, 4 with huge profit targets, bonus targets, drug rebates, like all of that just like pushed into the premium. And so when we say making it affordable, we're saying, let's make it affordable for the long run. Let's make it sustainable. Let's make sure that you can set it and forget it and know that all of the rates that are coming through in your renewal have not only been pre-negotiated 3 times by the time it hits your advisor's desk, but not just that we've done a lot of careful hand-picked work to curate the best possible situation. So for example, one of the other pieces that we use in terms of doing the right thing is making sure that we are hiring and working with claims auditors, not just auditors for looking for fraud in your health plan, but also auditors to look at, well, how are disability claims being paid exactly? So again, maybe insurance companies are not happy that we are asking a third-party independent auditor to go and take a look at some of these files, but we think it's a really critical part of that accountability framework and a two-way partnership where both parties can come halfway to the table and we can say, look, like we are as a group, as a cooperative, bringing millions of dollars of premiums to your hands. Let's make sure that there is an accountability framework whereby it is being paid in a manner that is both appropriate, that hopefully bypasses abusive and fraud practices, but also does the right thing at the end of the day and pays patients and pays Canadians when it's important that that happens. We also know we don't want to sugarcoat things. We see the population in the census that we represent. And while the cooperative has many, many businesses in it, we probably represent a cross-section of the Canadian economy. We have blue collar, gray collar, white collar. I think our block skews slightly more blue collar than white collar. So we have a bit of gray in there, probably about 55% in that one direction. And so the reality of that is when we look at our block and our census, we see a lot of Canadians in there that are earning minimum wage, where English might be their second or third language. They're maybe working 2 or 3 jobs. We don't know what is happening in that household. And these are very vulnerable people that are critical to not just maintaining your business. We know they're your family. But we also know that they are absolutely the backbone of the Canadian economy. And without these people showing up to work every day to build condos, to make glass, to make cars, or to build beautiful software, to create beautiful financial methods, then all of this would be a different situation. So that said, I just wanted to, underscore that our purpose before we get into the financial statements. I know we do this every year, and we say every year we've got really great financial outcomes. We're producing dividends. As a reminder, the goal and purpose of the cooperative is not to artificially produce a dividend. That is not the goal. Our original goal is to make the cost of a benefit plan as low as possible for a sustainable period of time, year after year, not just in 1 year. And also the second goal is to reduce risk. So when we talk about returning excess profit, that is just another accountability tool and accountability metric where we make sure that our rates and our underwriters in its totality are being fair to members. It's really tough to be an underwriter. I will say it's really hard to predict the future. They're looking at statistics of the past. Then you have black swan events that come in, like COVID, like interest rates, like inflation, like a labor shortage, Ozempic and the whole diabetes category coming through, layoffs in the Canadian economy. All of these events really are a reflection of what happens with human behavior, human purchasing behavior. And so our underwriters have to protect, number one, the business, but also protect the cooperative from losses. And so when you're seeing your renewal rates, yes, we are building in trend meaning inflation, or that extra little bit that we build in to make sure that we're not just charging the client claims plus fees. There's also a little bit of a cushion in there. And I think we get challenged quite often as to, these are very high rates. And we say, well, we appreciate that, 10% as an inflationary metric to build in is a lot higher. It sounds a lot higher than classical economical, like CPI inflation, like a basket of goods going up by 2.8% a year. However, we have to really account for the fact that this is a human population. We don't know who's going to get sick. We don't know what black swan events will happen. And at the end of the day, if we're wrong, we will happily write a check to you after we've netted out all of the deficits in the cooperative. So I'm really, really proud of this structure. This structure has been able to, on average, over all of our decades working together, return 90% of health and dental excess surplus back to members. On average, over a 2-decade period, we're like entering our 24th year, so almost 2.5 decades. Then we also have not just that, but elimination of risk across the board. These are fully insured plans that we're talking about in the cooperative. And then as a side note, any plans that work with Beneplan Inc. as a third-party administrator that is not fully insured, if they're self-insured, they are not reported here in the AGM. They're not reported in the annual report. They're not in the financial statements. And therefore, for privacy, all of their financial information is not put into the cooperative. The reason why we do this is to make sure that we are the opposite of an opaque black box pooled association plan, which we find is very much the norm in the market. So I'm gonna go through the rest of the meeting. Just want to acknowledge that quorum is something that we are working towards. I think we're just missing one company. So I'm just going to recommend that we proceed with a motion to start the AGM, knowing that one company I think is a little bit behind. We just got a text message in.
I see one motion from Lisa in the chat bar. Thank you, Lisa. And I do see some raised, and one more from Ivan. Okay, fantastic. Thank you. I will now launch the poll to officially start the AGM.
Thank you. Thank you everyone for voting. So now we confirm that we are beginning the AGM. And Elena, I'd like you to please share the screen to show the 2024 agenda of the AGM. We're showing this because if there's any requests to add to the agenda, please feel free to leave a comment in the chat bar. So if there's any requested changes to the agenda or additions, feel free to add it in the chat or in the Q&A. We are monitoring both pieces. If not, we're going to ask Elena to launch a vote. In a minute, we're going to ask for a motion to approve the agenda as presented. Can we please kindly ask for a motion to approve the agenda?
That is one motion and a second motion. Thank you. I will now launch the poll. And the agenda has been approved.
Thank you, everybody. We're now going to share the screen, and we're going to ask everyone to turn your attention, please, to the minutes from the 2023 AGM. So meaning the meeting that we had last year this time can be found on the appendix of your annual report, page 54 of the 2023 annual report. If you have any requests to change the minutes, please leave a comment in the chat bar. We would also kindly like to ask for 2 members to please put a motion through to approve the minutes from the 2023 AGM. Thank you, Paul.
We just need one more.
Thank you, Shane. Thank you.
Fantastic.
Great. Appreciate it.
Okay, it is approved and no one has anything to share.
Now we'd like to introduce the cooperative board members who were helping to govern the cooperative in the calendar year 2023 and the first bit of 2024. So first we have George DePete, who is the chair of the board and the finance committee. We have George Zenny on the finance committee, Bruno Sharippa, Courtney Sabu, governance and finance committee, Nilesh Paul, finance committee and governance committee, Dr. Anurag Sinha, vice chair of the board, Diane Gadoutsis, governance committee, Laura Siaka, board treasurer and finance committee, Daniel Copeland, and Shane Penny. I'd now like to introduce Erin Brooks, who's the group administration team leader at Beneplan, who will speak further on the importance of the board, acknowledge the board members who are retiring from last year, and introduce the nominations who we've received for new board members.
Thank you, Yaffa. The Beneplan Board of Directors plays a vital role in guiding the actions of the cooperative. Each year, this group dedicates their time and expertise, and for that, we say a huge thank you. With their support, we can ensure that Beneplan remains aligned with the best interests of our members and is maintaining the highest level of integrity in the process. The board is responsible for consulting and making decisions with the input of Beneplan management on many important issues facing the cooperative, including oversight and approval of our annual reports, allocation of cooperative funds, and other management items that come up throughout the year. They also provide Beneplan management with guidance on future planning and opportunities from a perspective outside of the day-to-day workings of the cooperative. We truly appreciate their input as members of the cooperative and as business leaders. We would like to take a moment to thank the following board members whose term is expiring for their time over the last few years, and for those who resigned before their terms have expired. Bruno Sharippa, Nilesh Paul, our finance committee, Courtney Sabu, governance and finance committee, and Diane Gadoutsis, governance committee. I would now like to present the members who have been nominated to join the incoming board and give them each a few minutes to introduce themselves. We will hear from the following new board member nominees. First, we are going to hear from Ivan Robic, founder of Credo Systems, which specializes in data security and privacy, generative AI, and tech solutions for business.
Hi, everyone. I'm a 2-time business owner. I run a traditional business, a family-run business for the last 30 years, which is an automotive tier 2, tier 3 supplier into Magna for the Canadian automotive industry. And my newest business is Credo Systems, which is a cybersecurity business for large enterprise banks, insurance companies, etc. Credo Systems is a customer of Beneplan, and that's how I was brought in for the board, my first board position ever. So I'm excited to contribute back to the business community with my, 20 plus years of knowledge. So thank you for the opportunity.
Thank you, Ivan. Up next, we have Josie Perino, VP Finance and HR at Central Station, a marketing firm working with branding, innovation, digital marketing, and physical experiences.
Thank you, Erin. Good morning, everyone. So my name is Josie Perino. As Erin mentioned, I'm currently the Vice President of Finance and Human Resources at Central Station Marketing. I've actually been with the company for almost 5 years, and that's where I had the pleasure of first meeting Yafan working with Joel. I've always had a really positive experience with Beneplan, so I'm really excited for this opportunity to be working and join the board. Just a little bit about me. Over the course of my career, I've worked in finance management roles for both large and small companies. My day-to-day focus has really always been finance and people, so hoping to contribute to the board in that regard. On a more personal note, I have an 8 and 10-year-old girls. They keep me pretty busy, and in addition to that, when I'm not doing that, my husband and I actually just started building a house last summer, so I also have roles as project manager / interior designer / construction site supervisor. So all of that keeps us pretty busy as a family. And I just want to say thank you again for the opportunity. And I'm actually looking forward to meeting all of you at the conference next week. Thanks again.
Thank you so much, Ivan and Josie. Because we have more vacant seats this year than we do applicants, you will both be joining the board by acclamation, so no vote is required at this time. Thank you so much for your time and attention. I will now turn the floor back over to Yafa Sakeja, who will present the 2023 management report.
Thanks, Erin. Thank you, Ivan. And thank you, Josie. I think it's so critical that we have really great business leaders on the board. If any of you watching have ever thought about applying for our board, we highly recommend that you consider it. Some people will often say, I don't have insurance expertise. I've never run an insurance company before. Why would I be qualified? And we said, look, if you're a Canadian business leader, you have staff, you have a benefit plan, you obviously are invested, you care about outcomes, and you're probably smart enough to ask questions. There's no such thing as a question that should not be asked. So we encourage everybody to come, be engaged, and learn. So thank you so much, Ivan and Josie. And we're now going to share the screen to walk through some pieces and highlights of the annual report. The annual report looks at calendar year 2023, and we're looking at we're going to talk about sort of some of the claims and losses that impacted the cooperative, as well as some of the positives and opportunities that we found in the last year. So the total amount of dividends payable to member owners was just over $1.1 million. We are looking at a different amount of losses from the previous year. And again, remember, think that the dividend is more like getting a tax refund. When you get a tax refund, you're maybe happy that you have a tax refund, except it also means that you paid too much the previous year. So if you just, Elaine, if you just want to pause on this page, please, the financial highlights page, this is where we try to look at a 50,000-foot view of the outcomes that the cooperative was able to achieve. So paying back $1.14 million in cash dividends back to Canadian entrepreneurs. The cumulative dividend that we have paid since inception is $31.5 million. That also does not include all of the low fees that we have been able to negotiate. $3,600 was the average dividend per policy member in the year 2023. So that gives you an idea of the amount of work that goes into making sure that rate setting is done in an accurate way, not to underprice, not to overprice, but to price correctly and price fairly. Dividends as a percentage of total health and dental premiums were just under 4%. So again, that's where we're saying we're trying to really estimate what true inflation will be. And I can tell you from doing this several years in a row, 4% as a percentage of health and dental premiums is probably one of the better metrics we've had. We have had some years where it was 11, 12%, like in the year of COVID, where we had months of lockdowns and an abnormally high, a $6 million dividend that was abnormal and really should never produce such a high number. But you see that it does swing from year to year based on real actual inflation. And so when you look at that compared to the trend, you start to see that, we do have inflation, but maybe it's not to the level of the trend that insurance companies are building in. So 10, 15% as an inflationary padding in the premium. The actual health and dental loss ratio under the cooperative and the stop loss was on just about 82%. And the actual loss ratio is just basically saying that for every $100 in premiums that was paid towards health and dental, $82 went towards paying claims. The rest of them are fees and taxes. And so I would say the blended target loss ratio is basically a fancy insurance term for how much margin or markup needs to be between the claim and the premium in order to pay compensation to the insurance company who pays claims, to Beneplan, to advisors, and then premium tax as well. And so the blended target loss ratio of the whole cooperative is 84%. So you can see there, like, the 81 plus the 3%, that gets you kind of close to the target loss ratio. And we're really proud that our target loss ratio for the whole cooperative with advisor commission still embedded is still in the 80% market, which is very competitive for the Canadian entrepreneur lens. We make a point of telling you what the smallest dividend is, a $24 dividend, because it's not to show the size of the business. That could be actually a medium or large business, but that's to show efficient rate setting, that when we're serving renewals that have been pre-negotiated multiple times, that we're really trying to make sure that we're being fair to the employer and also fair to the cooperative. When we look at the average ROI as well, I'm just going to skip to that other number, 81%. We also look at, when members join the cooperative with an advisor, they actually produce a return on investment, because dividends, if you just look at the dividends, not even the fee savings or the premium savings over time, but just looking at dividends on average, when you take a look at that ratio, businesses are very much making a return on investment by having a strong account manager leading their group. So we do think it's important to even have advisors that hold Beneplan accountable. And so we definitely are very thankful for the advisor channel who helps support scaling our message and telling as many Canadians as possible that we exist and that we're an important part of the economy. The largest dividend paid in 2023 would be $41,000 and change. And we also report the largest dividend because we want to underscore and remind ourselves that that would have been excess profit kept by an insurance company if they had not been with Beneplan in that year. And then 30 is the number of members with dividends less than $1,000, indicating efficient rate setting. Okay, thanks, Alana. So I'm not going to read through the whole annual report. It's 50 pages. It is something that I love to read on a Saturday night. I find it absolutely riveting. And so I'd love for you all to join me. But I think what we're doing in talking about this report is we're talking about the pieces that really impacted all benefit plans in the last year. So some of the claims losses that were net new that didn't impact plans from previous year, definitely the diabetes category of medicine, the Ozempic trend. I don't know if some of you follow some of these celebrities that have suddenly lost a lot of weight, and we see TV commercials where it's like, just ask your doctor about Ozempic, just ask. And so we very much support the reason for this medicine. We think it's a miracle, life-changing medicine. It's wonderful that people can lose large amounts of weight. If it's definitely impacting their health, it could be the difference between life or death. So this is an innovative medicine. That said, this is a brand new category of injectable medicine that is covered under Canadian benefit plans, has been approved for Safety and Health Canada. And so not just Ozempic, but then the other pieces such as Mounjaro and Wegovy that are coming onto plans soon in 2024. Wegovy and Mounjaro are different from Ozempic. Ozempic is a medicine that is approved primarily for diabetes, whereas Wegovy and Mounjaro and others are approved more for weight loss as the indication. And so that just raises a flag for us because our job is to protect the dollars and the money of Canadian entrepreneurs. So regardless of what it does, we have to just make sure that we're aware that this is a net new. If somebody were to take this medicine every year, which we're happy that people are getting better and feeling healthier. However, it does represent, we can't sugarcoat that this is an average of $4,000 or more per person per year and up, because it is predicted that this is a medicine that people will be on for the long haul. There have been some people who started it and stopped it because of negative side effects, but there's also a lot of people that say this has absolutely changed my life. I'm telling my friends and family about it. Everyone needs to know about it. Great. That is now a net new cost per person per calendar year of a few $1,000s a year. And so this, we just noticed it's under the stop loss. Beneplan stop loss with insurance companies. We're proud we've been able to keep it at $10,000 per calendar year, while insurers are trying to push it up to $15,000 or more, meaning downloading more of the cost and risk onto our plan sponsors. It's trying to hold steady of that $10,000 way. I see a question from Tim. Is there a way to cover only for diabetes? Great question. Thank you for asking this. So we have asked our insurance carriers to provide a copy of, these are all medicines, Tim, and others that there are subject to authorization. So you can't just go with your drug card and pick it up. You have to go through pre-authorization, both with Green Shield and cooperators, who are our two current drug card providers. So they provided these forms. We've taken a look at them. We are satisfied with the way the senior health claims analysts are reviewing them. That said, I know that in speaking to some physicians, they might be just inclined to support this. And so, if it means that their patient is healthy, a lot of physicians, I can't sugarcoat it, a lot of physicians don't know how much it costs and frankly don't care. They say, well, if you have insurance, you have an insurance company, like, why do I care what it costs? I've actually met physicians that are specialists that have no idea that their medicines that they're prescribing costs $50,000, $100,000. They're just told by reps from the manufacturing company, the pharma manufacturing company, don't worry about it. If you have somebody that doesn't have coverage, just call Mary. She'll hook you up, basically. Like, she's got forms. We've got $1 billion of patient assistance program funds deployed in Canada. And so, Tim, like, when you ask these questions, we say, yes, there is a prior auth process. They are asking if you have diabetes. You can only get if you have diabetes. However, with the other new categories of medicine that are weight loss only, it's not necessarily that you need to have diabetes. It's, are you meeting the criteria for somebody that would really benefit from this medicine? So I think it's important that everybody on this call, if you have a benefit plan, make sure you take it out, read your policy. Do you have weight loss medicine covered as a separate category? Aaron is saying, I know a lot of our plans list no coverage for anti-obesity drugs. Yes, that's right. It's also on a member by member basis. So in the cooperative, we don't force a plan design upon any employer. It's only fair that employers choose their own plan design. So therefore, it's really, we just ask you, like, if you can just take a minute to read it, ask your advisor maybe for help. If it's sometimes it's tough to read these are like long contracts. Try to find that and then do a little meditation, like go for a walk in nature and think, like, how do you feel about this? Like, philosophically, what is your employer's obligation and responsibility here? Where does your obligation start and stop from a finance perspective? Are you an employer that can afford this, or is this going to really risk the survival of your benefit plan? So some of the pieces that we've heard, some employers have said to us, we're happy to pay for it. Can we put in a copay where, they're meeting us like 10% of the way or 20% of the way? That's absolutely something we can put in the system. Some employers also say, can we put in a limit, like a maximum on that medicine? That's also something you can code in the system. So I see another question, look to see if anti-obesity are covered. Yes, absolutely. That is right. So just to underscore that, I don't want to really disparage this category because it really is life-changing for a lot of people. If they can be healthier, hopefully they can be more productive members of your business. We just want to make sure that you're aware of what that means. Aside from Ozempic, diabetes as a category has really just eclipsed a lot of the other medications. I think maybe 10 years ago, we used to see it was like more heart disease, mental health as well, the number 1 and 2 biologic drugs up there. We still have biologic drugs that are impacting our losses. So the rheumatoid arthritis, the rare drugs, rare blood diseases, psoriasis, immunosuppressants, that category is still there. And they're under the stop loss, meaning that if this is a recurring claim every year, it's going to be added into your renewal and it's going to be affecting your rates in the following year. So always make sure that you're aware of this and you're having regular conversations with your advisor about what this means. Some of the other losses that impacted the cooperative were travel. So we noticed that while travel is definitely insured from the first dollar, just the stop loss piece component. So some of you might be seeing that your stop loss rates are going up slightly, or maybe more than slightly, maybe 8% in some cases. And so in that case, number one, your stop loss rates depend upon what sort of coverage you've purchased. So the length of duration of the travel, the age of termination, whether you have trip cancellation, lost baggage or not. And so drug maximums or not. So all of those things go into your stop loss premium that you pay. I can say that we saw a lot of, I'm going to call it revenge travel post-pandemic, where we had a lot of people that had to pause their cruises or pause their great family reunions from 2020, even up until 2022, we found that people were being cautious. 2023 was really the year that everybody had their big trips with their families and were so thrilled, but sometimes people also sadly got ill. And so those claims, it's more of like a lagging effect. In 2020, we saw almost no travel claims there. And then now we're seeing that some of the after effects coming through. The other two pieces that impacted the cooperative in this year was the dental fee guide and more dental usage. So certainly, again, this is more of a pendulum effect. We did predict the pendulum effect in the 2020 and 2021 annual report, whereby dental offices being shut for 2 months really probably traumatized some small business owners, because we know that dentists are still small business owners. They still care about their staff as well. And so they had a lot of input cost, the cost for PPE, the labor market churn. A lot of you experienced a labor market churn as well throughout the last 3 years. And so the dental fee guide has been increasing to a much larger acceleration than in previous years. Prior to the pandemic, we were typically experiencing fee guide increases of 3 to 4%. But mind you, that's an average of all of the codes. Like if you think of a dental fee guide, it's almost like the yellow pages or an encyclopedia. I'm maybe dating myself to say the yellow pages, but that's the average. So if you actually go code by code, some codes might increase by 10%, like the most frequently used ones like dental scaling, which is when they clean your teeth. And then the least frequently used ones might be going up by a different percentage. So 3% used to be the average across the board. Now we're looking at averages that are closer to 8, 9, even 10%, depending upon some jurisdictions where you live. So that is definitely contributing to the increases that you're seeing. And that's something that, in terms of what Beneplan is doing to try to mitigate this, there's not much we can do. These prices are set by the Ontario Dental Association and other provincial associations. So the two things that we've done are, number one, Beneplan is a member of TPAC, the Third Party Administrators Association of Canada, which is just a group of other benefits companies that care about issues that affect all of us. So we definitely do not share confidential private information among each other. But for pieces like new taxes that affect your benefit plan or the dental fee guide, we are coming together to try to communicate with dentists that this is really affecting the financial viability of plans. It's hurting employers' ability to even provide coverage. And so we would like to have a two-way conversation. We also collaborate with the CLHIA, the Canadian Life and Health Insurance Association, where the insurance companies come around the table. They're doing some of that same communication efforts, trying to communicate to dentists. At the same time, as you can probably appreciate, if you're a vendor to an insurance company and they're telling you, hey, could you please be very mindful and sensitive when you're setting your pricing? It's not always sunshine and roses. So I just wanted to put that out there that we are trying. But if you were really concerned about your dental usage, definitely talk to your advisor about, there's usually like 10, 15, 20 different ways that you can save money within that category without bringing the hammer and cutting benefits across the board. There's small things that you can do under the hood, like looking at how many scaling units you have, looking at the recall, if it's really affecting your business's ability to proceed with this benefit. I mean, I know inflation has really impacted a lot of businesses. And then finally, I think interest rates, the commingling of it, interest rates, inflation, and the economic fear that we saw in 2023, we did see a number of members of the cooperative proceed with layoffs and terminations of their employees. And we know that when we have layoff situations, typically by law, you're supposed to proceed with at minimum 1 week per year of service, according to your, again, based on which labor pool you are, based on the jurisdiction, but basically 1 week per year of service, you've got to extend your benefit plan for. And so we find that people handed a pink slip are certainly going to make sure that they are trying to use up their benefit plan as much as possible before they're moving on. In terms of the opportunities we saw in the last year, we did see that some of the benefits that used to provide us more grief, the interest rate-based benefits like life and disability, started to stabilize. So that was a good thing. Higher interest rates benefited the life insurance refund that you plan members are receiving through your dividends. So that was a good thing. And then we will say that this is a year that Beneplan is going to be looking at all of our carrier relationships to make sure that we're holding all of our carriers accountable. So that said, I'm going to pause there. I'm not going to go through the whole annual report. Just wanted to go through some of the macroeconomic pieces that impacted the dividends this year. So moving on. I'd now like to invite Chin Lin, who is the manager of underwriting at Beneplan, to introduce the 2023 financial statements. We also have with us Sean Wilson, who's one of our auditor partners from S&C Partners, who can assist in answering any questions regarding the report after its presentation.
Thank you, Yafa, and good morning, everyone. We'll start with the statement of income and accumulated surplus. For 2023, the total surpluses from the carrier amounted to 1.18 million, a decrease of 548,000 compared to 2022. The total expense decreased slightly due to the absence of publications and in-person meeting costs. There was no growth in incentive fund payout for the year, as no advisor met the minimum threshold of 300,000 of net new premium within the fiscal year. The final patronage dividends are 1.14 million for year 2023. Next, for the balance sheet statements. Total asset amount to 1.67 million, including cash equivalents, account receivables. Those are the surplus from the insurance carrier. The restricted cash consists of health and dental reserve held by the cooperative. Total liability amount to 1.27 million, including account payable, accrued liability, patronage dividends payout, and tax payable. Next, for the statement of change in health and dental reserve. The reserve fund at the beginning of 2023 is 386,032. New contribution to reserve from surplus amount to 65,164, while reserve of terminated clients for better to cover their deficit is 41,764. The net contribution to reserve is 23,400, resulting in total health and dental reserve of 394,566 held by the cooperative. Total surplus withheld by the insurance carrier amount to 808,295 as the reserve are now recognized as the asset of the cooperative. Therefore, the total health and dental reserve, including unrecognized portion, is now slightly over 1.2 million. And thank you so much to the cooperative auditors, Sean and his team for all the fantastic work and dedication put into the financial statements. And thank you for allowing me to report on the financial as well. And if you have any question on the financial statements, please write your questions in the chat bar, and we will address them one at a time with the support from Sean. Thank you.
Thank you, Chin. Thank you, Sean. So we'll just pause to see if there's any questions in the chat.
We have one from Colleen. Is the cooperative holding any of the reserve?
So yes, of the reserve, I believe it's 394,000 roughly is being held directly by the cooperative, and that's in note 8, I believe it is.
From Paul, please explain the surplus retained by insurers not yet recognized by the cooperative of 808K.
Right, so those reserves, those are reserves still held within the cooperators and within Green Shield. The idea being is that reserves to be held within the cooperative must first be taxed. Having those reserves retained directly at the insurer level defers the taxation of them. The reason why they're not recognized directly as an asset is because the cooperative doesn't control direct access to that asset.
Yes. And so can I just build on that? In terms of the control, we have had discussions with the board about whether or not they wanted to retain control, knowing that since the cooperative is not a licensed insurance company, cannot hold just excess cash or excess reserves on a tax-free basis. So we've had those conversations every year, and it has been determined that as long as we can account for this IBNR, account for this trail and runoff in claims in case of deficits or terminations, that we still trust the insurance companies to be the custodian. Okay, if there's no other questions, let's go ahead and ask for a motion, please, to accept the financial statements as presented.
We have two motions, so I will go ahead and launch the poll. So that is 24 votes to accept.
So just noting that if there's some who were on the call and had dropped off previous to this vote, what we're going to do is Lena will work together to make sure that we're chasing those last few employers to make sure they are voting to approve the financial statements, to make sure we're meeting our quorum requirements. That's okay there, John. We'll make sure that we're following up with all the registrations to make sure that, the whole purpose why we do this is because we would like to pay dividends after members have reviewed it and approved it and asked questions. So dividends do hinge upon paying this out. So we'll just make sure that we're going offline to approve the financial statements. Thanks, everyone.
So now I would like to introduce Joel Gomes, who is VP of People and Operations here at Beneplan, to tell you a little bit more about our upcoming HR conference and member appreciation lunch.
Thank you, Alana. Thank you, board members, and thank you to all the attendees who attended today's AGM. Now that all the heavy lifting is done, I just wanted to do a little bit of housekeeping and remind everybody about our HR conference and the client appreciation lunch that's happening on May the 2nd at the Granite Club. That's at the intersection of Bayview and Lawrence. It's going to happen from 9 a.m. to about 3:30 p.m. Now, remember that it's complimentary for all of our members and brokers. There's going to be breakfast and hot lunch served. And basically, it's an opportunity for those who are attending to connect with fellow business leaders who are part of the Beneplan family. You'll learn some valuable information, and there'll be some takeaways in the context of what's happening with labor law trends and things of that nature. So in that context, we have several presenters. We have Sherrod Coos, who are labor lawyers. They will be discussing current labor trends and upcoming scenarios that might sort of persist through this year and some things to be prepared for in the future. I'll be presenting HR topics and best practices, as well as doing a quick review. As you know, we do HR consultancy for our plan members. So I'll do a quick review of the key HR topics that happened through 2023. We will have Maple Telemedicine on hand to speak about their product, which is telemedicine. We're also going to have representatives from Cooperators, Green Shield, RBC, and Humania to discuss industry insights, trends, and their products as well. Now, the fun part, there's going to be opportunities for attendees to enter various draws. We have, thanks to our, key speakers, swag and chances to sort of win big prizes. I hear there's a few sports tickets. Not going to sort of let out too much. Now, the key thing is the last day to register, which is tomorrow, April 26th by 4 p.m. So that's end of day tomorrow. So if you haven't registered yet, you can still register. You need to email Alana. The email address is ea@beneplan.ca. Once again, ea@beneplan.ca. So that's executive assistant, but it's just ea@beneplan.ca. And she'll ensure that you get onto the guest list, and she'll send you event details. And so, of course, the Beneplan team is going to look forward to seeing all of you at the HR conference client appreciation event on May the 2nd. Thank you very much. And I think we'll open the floor for questions.
So we do have a question from John. Sorry, John, you put this on quite early in the morning. Who was asking, who was the employer, Yafa, when you had your opening management remarks?
Oh, who was the employer that started it all? And my understanding, which business helped to inspire the creation of the buying group? Is that what you meant, John? Correct. Okay, thanks. I'm going to hide their name for privacy, but I can describe the business. I could say it was a gray collar business, so a mix of blue collar and white collar. They were a manufacturer that was making really amazing, accurate product that was involved in critical industry in Canada. It was actually the controller. The controller worked with the founders of that business, and the controller and the finance lead, who was a really, really smart cookie. She was the one that really thought, let's try to do things differently. So thanks for asking that question, John. I appreciate it. It is cool. And it really is. A lot of inspiration is coming from all of these Canadian entrepreneurs, business leaders. So that's why we love hearing from all of you on the call. Okay, if we have no other questions, we're going to ask if we could please have a motion to adjourn the AGM. If you could please put your motions in the chat bar, and then Alana will pop up the vote screen. And then you're always welcome to ask questions after the fact. You can send a note to your advisor who will make sure that they pass it on to our team. We'll share the results of the motion to adjourn quickly, making sure everyone's had a chance to vote. And while that's happening, I wanted to thank everybody on our team who helped, thank you. Okay, so we did pass to adjourn the AGM. Thank you to Alana Nish, Aaron Brooks, Chin Lin, Joel Gomes, Vince Principato, Sean Wilson, and thank you to our new board members, Ivan Robick and Josie Perino. And thank you to everybody here in our community. We really couldn't do this without you. So thank you, everybody. Have a great day.